It's Wednesday the 6th, I'm FX Blue and this is CurrencyTransfer.com's market update. So the main headlines today are that strong data gives sterling a lift, but Brexit concerns loom in the background. Rumours begin to circulate that the ECB may taper quantitative easing, and the US rate hike is fully priced in, but concerns remain over the tariffs. So sterling got an unexpected lift yesterday when PMI service data followed manufacturing and construction PMIs and surprised to the upside. Services data jumped from 52.8 in April all the way up to 54 for May. Cable reacted accordingly and jumped to 134.10, and sterling euro moved up as well to touch 114.65. However, the market is still braced ahead of the UK proposals for the future relationship with the EU. The Brexit bill is penned to be debated in Parliament next week, and current thinking is that the proposals will most likely come out before that. But whenever they come and whatever they cover, there is likely to be a period of turmoil for sterling around that. Yesterday we saw the new Italian Prime Minister outline his plans for the country. The positives was that he's outlined no intention to leave the euro. However, the negatives is that he also announced his plans for tax cuts and increases in the welfare. That will obviously add to their ballooning government debt, and so one to watch as things develop over in Italy. Across the Eurozone, the important story is that rumours have started circulating that the ECB may add an end date to the quantitative easing programme when they meet next week. Debate on this is strong, however, because with the current economic slowdown across the Eurozone, an increase to the asset purchase scheme is almost as likely as any reduction. However, the market reacted to the rumour and euro dollar rose to 117.35 yesterday. Meanwhile, the dollar index slipped to 93.78, mostly attributed to the euro rally and the reaction to the rumours. But looking ahead, the market has largely priced in a rate hike in the US next week. The economy is performing adequately, inflation is under control, recent activity and data points do show good growth, but is there a chance that the market is getting carried away and pinning rate hike expectations on a strong non-farm payroll and a marginal increase in wage growth? Yes, there is political pressure to normalise rates sooner rather than later, but the Fed Chair Powell, he supports political independence of central banks, and he is committed to seeing hard evidence before acting. Recent data may convince him to act, but there is therefore still a chance that there'll be a surprise no change at next week's meeting. Looking ahead to today, we see the US trade data out. That's expected to remain at about $49 billion of deficit on a monthly basis because it's too early to see any change of significance from the tariffs that have been imposed. But this report will gain significance going forwards. We will, of course, keep you posted on that and all things relevance. If you've got any questions, pop them in the comments below.